Dear professional student, you are welcome to another course, which is fixed income valuation. And under this course, we will looking at time value of money. What is time value of money? When we are talking of time value of money, this simply means the money received in present is of higher worth than the one received in the future, as money received now can be invested and it can generate cash flow to enterprise in future in the way of interest or form of investment appreciation in the future and from reinvestment. So the term value of money is also referred to as present discount value. Money deposited in savings bank account earn a certain interest rate to compensate for keeping the money away from them at this current point of time. As a result of this, if a bank holder deposit 100 naira in the account, expectation will be to receive more than 100 naira after 1 year. So what this time value of money is trying to portray is that the money you receive today is definitely going to be higher than the one you will receive tomorrow. And it is not automatic. Please, let's understand it.